The U.S. dollar is lower to start the new trading week. Concerns about President Trump's tariff situation is weighing on dollar buying and maybe asset buying. We're seeing U.S. stocks down. We're seeing yields move up a little bit. I'll talk about the three major currency pairs from a technical perspective in this video to kickstart your trading day and trading week. So let's get started. The euro versus U.S. dollar on the hourly chart moved higher in the European session, and in the process we extended eventually above the 61.8% retracement of the move down from this high going back to the looks like the end of April to the low price that we saw in May. That 61 came in at 1.13787, and you can see the price initially found willing sellers against that level. That level also happened to correspond with these swing highs right through here, which are remembered, and the market, although the price moved above it in trading last week and the week before, the market respected that 61.8% retracement, that swing level, until it didn't. And then when it broke above that level, we saw increased buying. That increased buying took the price above this swing area right here, where we had a number of different swing highs for these two trading days here before moving to the downside. We returned to that area in trading last week, last Monday to be exact, and then Tuesday the low price came in near the low of that area. This is the swing area, so we broke above that, extending up toward this next high price right here, but found willing sellers, and now we're trading in between this swing area right through here between 114.06 and 114.24. If the price moves back below that level, we could see a rotation back down toward the 61.8% retracement. Conversely, holding support right here, which so far we're trying to do, and a move above the 24 level would open the door for a move up toward the 114.39 level, and get above that, that's more bullish. Let's take a look at the dollar versus yen next, and again we'll focus on the hourly chart for this currency pair. And if we look at we found that the market fell below the 61.8% retracement right here. Similar to what we saw in the euro versus US dollar. There wasn't necessarily anything else at at that level right through here, so we traded above and below it, but then found willing sellers and rotated to the downside with the last move lower in the US dollar. The market came down toward this swing area right through here, where we had some swing lows, which eventually led to a high right there, a move high. We came back down toward that area, traded above and below it here as the market couldn't figure out which way it wanted to go, and then based into this area right here, and here before moving to the upside. So that's sort of the basis of this area through here. In trading last week, last Monday, the market traded above and below that level before rotating to the downside and then moving back to the upside. But once we broke above this level, it was found increased momentum. So this area between 142.72 to 142.90 will be a barometer for traders. We had traded below that level with the increased selling momentum in trading here today, so not all that surprised. Down below we have this big wide swatch down here, which goes back in time, back through here as well, between 141.54 and 142.10. The low price that we saw last week came down to the high of that area before finding support and moving to the upside. So I think the market will pay attention to that level on further selling pressure. Finally, let's take a look at the sterling versus the US dollar, and we'll focus on the hourly chart once again. In this currency pair, like the euro versus US dollar, saw a big break to the upside. Now, the key things on this chart to me are the two moving averages, which are converged. That suggests that the market is in neutral through here, and we traded in a neutral type of way with a fail break to the upside, fail break back to the downside. But then the buyers came in with the overall dollar buying. We saw the price move above the high prices that we saw on Friday's trade, on Wednesday's trade, and that was also a low price on Tuesday's trade through here. So there's some history around this area between 135.10 and 135.21, and when we broke above that level, that increased some momentum to the upside. Now we do have these high prices right through here that are still in play, and targets that we need to get to and through. Those are the high prices from 2025, so getting above those levels is important. Starting with the 135.63 level. On the downside, we're going to watch this level down here between 135.10 and 135.21 for our support target. If the market can hold above that level, then the bias remains more to the upside, especially since we're above the 100 and 200 hour moving averages. So there we have it, a look at the three major currency pairs to kickstart your Monday morning. your trading week in the U.S. My name is Greg Michalowski. Good fortune through trading. Bye-bye now.